Welcome to Rad Academy. So today we have a question on manufacturing accounts. We have a question on manufacturing account. So we are going to solve this question on manufacturing. Before I continue, if you have not subscribed to the channel, kindly subscribe for more tutorials on accounting. Subscribe for more question and answers videos. As soon as I upload a video, you'll be the first to be notified. So I read the question. Said the following balances were extracted from the books of Kisi and Kisiwa Manufacturing Enterprise on July 31, 2023. You have inventory at 1st August 2022, which is raw materials 92,000, work in progress 58,000, finished goods 158,000, purchase of raw materials 298,000, carriage on raw materials 22,000, rent and rate 44,000, factory and wages 66,000, factory power 34,000, carriage out was 12,000, selling expenses 24,000, insurance 28,000, general expenses 36,000, plant and machinery 160,000, motor vehicles 200,000, trade receivables 80,000, bad debt 16,000, provision for doubtful debt as at 1st August 2022 is 32,000, depreciation on plant and machinery as at 1st August 2022 is 32,000, sales is 600,000, wages and salaries is 40,000. Then when we come to the additional information, the one is we have inventory at July 31, 2023 were valued as raw materials 28,000, work in progress 40,000, finished goods 120,000. Two, rent and rates and insurance are to be apportioned as follows. Rent and rates is 60% and 40% for factory and office respectively, and insurance is 80% and 20% for factory and office respectively. Three, depreciation is to be provided for as follows. Plant and machinery 10% per annum on reducing balance basis. Motor vehicles 20% per annum using the straight line method. And the four, the doubtful debt provision is to be made equal to 5% of trade receivables. You are required to prepare the manufacturing, trading, profit and loss account for the year ended July 31, 2023. So this is our question on manufacturing accounts. So when you have a question on manufacturing account like this, then it means the first thing that you have to do is to prepare your manufacturing account to determine your profit. Sorry, to determine your cost of production. So it is the cost of production that you are going to transfer to the trading account. Here we are not buying and purchasing, but then what we are doing is we are manufacturing our own goods. So the goods that you are going to manufacture, we need to get our cost of production. And for you to get your cost of production, is the summation of your prime cost and your factory overheads. So let's start with our. So first, we are going to write the name of the business, which is Kisi and Kisiwa. and ECY. Manufacturing for the year ended first 2023. So first we bring our CD sign, bring our trade CD sign. So with the manufacturing account, it is a format that we follow. So we start with our raw materials. We start with our raw materials. So the raw materials, we start with the opening inventory of raw materials. So anything that is raw materials will come here. So the opening raw materials, opening inventory for raw materials is 92,000. We write down 92,090. Then we add purchase of raw materials. Of raw material. So since when you look at the question, there is a carriage on raw materials. So since there we have carriage on raw materials, then let's bring our purchase of raw materials on the second column. So we add to the carriage on raw materials. So carriage on raw material, 22,000. So we add this to get 32,000. 20,000. When you add this to this, we add the 320,000 to the 92,000. We get 412, which will be called our cost of raw materials available for production. So as soon as you get the raw materials available for production, then you less the closing inventory of raw materials. Probably not all the raw materials were used for the production. So if not all the raw materials were used for the production, then you have to less the raw material that was left. So we less closing inventory for raw materials. So when you look at the question, we have the closing inventory for raw materials, which will find this in the additional information. That is the closing raw materials. So the closing raw materials is 28,000. So when we less 28,000 from 412,000, we have 384,000. And this is called our raw materials. This raw materials is our raw materials consumed, cost of raw materials consumed. So this is the actual raw materials that we consumed or used. Now we have our direct materials. The next is to find our direct wages and direct expenses. And when you look at the question, we have factory wages. Anytime you are solving a manufacturing question and you see factory wages, don't treat it as a factory overhead, but then rather treat it as a prime cost. Yeah. So sometimes you see factory wages, manufacturing wages, we treat it as a prime cost. That is our direct labor cost. So we don't treat it as a factory overhead because we are seeing factory wages. So since in the question we have factory wages, we are going to treat it as a prime cost. That is a direct cost. So factory wages, that is 66,000. So we add this to, so since we don't have any direct expenses, then we add our direct materials to our direct labor, then we can get our prime cost. So when we add this to this, we get 450,000, and that is called our cost. So now we have our prime cost, we move to our factory overheads. So our factory overheads, we have factory power, we have factory. So these factory overheads are all indirect expenses or costs. So factory power is 34,000. Then we have factory supervisors. Salary, which is 22,000. Then we have rent and rate. And when you read there, when you go to the additional information and you read, we have rent and rate. And the rent and rate, they said we should not give all to one particular department. We should give a percentage to factory and a percentage of the cost to office. That is, we should give the cost of rent and rate you are seeing in the question. 60% should go to the manufacturing and 60%, 40% should go to the office. So with the rent and rate, we are going to apportion. Apportion means we are going to share. We are going to share for factory and office. So with the rent and rate, 60%. So 60% of the rent and rate amount. The rent and rate amount is 44. So 60% of 44,000 will give us 264,000. Let's move to the next page. Let's see this side. I'm continuing from here. So now the next that we have is what insurance. Insurance too. They said we should apportion it. So insurance 80% is for factory. So we apportion 80% of the insurance cost to factory, which is 28,000. 28,000. Then we are going to get for the. Then we have depreciation of plant and machinery. We are going to bring the depreciation of plant and machinery because the plant and machinery is used in the manufacturing department. So any cost that is related to the plant and machinery, we have to attribute it to the manufacturing department. So we have depreciation of plant and machinery. And with the depreciation of plant and machinery, they said we should use the reducing balance method. Said we should use the reducing balance method. So this is how we are going to do with the reducing balance method. What they are saying is before we apply the percentage to get our depreciation, we should first of all reduce the cost. So when you look at the question, the cost of the plant and machinery is 160,000, and we have provision for depreciation for plant and machinery. You get it? We have a provision for depreciation for plant and machinery. That is that in the question we have depreciation on plant and machinery as at 1st August 2022, which is 32,000. That is the depreciation for last year's plant and machinery. So what they are saying is with the reducing balance method, we are going to reduce the cost of the plant and machinery by the depreciation of um, plant and machinery as at 1st August 2022. That is the provision for depreciation or accumulated depreciation. So anytime we are asked to um, use the reducing balance method, you subtract the provision for depreciation or accumulated depreciation from the cost before you apply the percentage. So what that is what you are going to do now. So the cost is 160,000 minus the 32,000 before we apply the percentage, and the percentage is 10%. That is the reducing balance method. So when we apply this, we get 12800. So that is all for our factory overhead. So when we add all our factory overheads, we are going to get 117,600. Then we add our factory overheads to our prime cost, which is 450,000, to get 567,600, and that will be called our gross cost of production. So when you get to this point and you have work in progress in the question, which is also a type of inventory, you have to add the opening in work in progress. Opening work in progress. Add it. That is the format. So you just go by the format. So that is 58,000. We add this to get 625600. Then you less closing work in progress, which is 40,000. So you find the closing work in progress in the additional information. You less from this to get 58,600. And this is called the net cost of production. So when you start with your trading account where you write to opening, and instead of you to write add purchases. Now we are not purchasing and buying, but then we are rather what producing. So it is this net cost of production. That is what we are going to transfer to the trading account. So when you get to this point, you just continue with finished goods. Now you are done with the raw materials. Now you're moving to the finished goods. Finished goods. So with the finished goods, it starts with your sales. So the finished goods is where you come back to your trading profits and loss account. So we have a sales of 600,000. You don't have any return anymore. So we less cost of sales. Bring our opening inventory. So this is opening inventory of finished goods. Opening inventory. The opening inventory of the finished goods is 158. Then we add the cost of production. Cost of production is 5, 8. So let me continue on the next page. Next page. So cost of sales. So we have your opening inventory. Then we add what? Cost of production. Opening inventory is 158. Then it's 86. So when we add our cost of production to our opening inventory, we have 743,600. And this amount is called the cost of goods available. So when we have our available for sale, we less the closing inventory. So this closing inventory is the closing inventory of the finished goods. And you'll find that in the additional information. Find that in the additional. And that amount is 120. 120,000. So when we less from this, then we have 623,600. That is what we call our cost of sales. So when we less our cost of sales from our sales, then we get then we are going to get a minus. So that will be our gross. That is 2, 3, 0. So when we get our gross loss, anytime you are preparing a trading profit or loss account and there is a provision for doubtful debts, as soon as you get to this point, you have to check whether there is a decrease or increase in provision for doubtful debt. Because if there is a decrease in provision for doubtful debt, then it means it is an income which you need to add. So at this point, we are going to check. And when you said we should calculate 5% for provision of trade receivables and 5% on the trade receivables, 5% on the trade receivables will give us 4,000. Trade receivables, 5% will give us what, 4,000. And the provision for doubtful debts that we already have in the question is 32,000. Meaning there is what, a decrease. It has moved from 32,000 to 4,000, meaning there is a decrease. So if it is a decrease, then it is an income. So we find the difference between the old one, which is 32,000, and the new one, which is 4,000. And we are going to treat that amount as an income. So 5% on the trade receivables, which is the 80,000, give us 4,000. So we treat the difference as, which will give us 28,000. So this is 28,000. Now we have a positive 4, 4, 0, 0. That is for this total. So that is all. That is all our other income. Then we come and we less our operating expenses. So normally with the manufacturing accounts, when you get to operating expenses, we group them into three categories, which is the administrative expenses, selling and distribution expenses, and factory wages. So let's start with the administrative. And the administrative expenses. That is the office. So any expenses that you think is attributed in the administrative, you put it under there. So we have something like general expenses. We are going to place it under the administrative expenses. So general expenses, we have 36,000. Then we have insurance. So we've already apportioned 20% of the insurance cost to factory. We've already apportioned 80% to factory. So we apportion the 20% to office, which is 20% times 28,000, which will give us 5,600. Then we have rent and rates, where rent and rates we've already apportioned 60% to factory. So we apportion the 40% remaining to office. So that will give us 17600. Let's move to the next page. So the next expense that we can place under the administrative expenses, wages and salary. wages and salaries. Wages and salaries, we have 40, yeah, 40,000. Now let's move to the selling and distribution. We have bad debt. We are placing bad debt under this because we have our bad debt when we sell. So our bad debt is 160. And we have carriage invoice. That is when you are carrying our goods to our customers. So that is done under selling. So we place it under there, and the amount is 12,000. Then we have depreciation of entity, which is 20%, 200,000. And now give us 40. That is all the expenses that we have. So we add all our operating expenses. Then we have selling expenses. That is the last one. We have selling expenses. Selling expenses, we have 24. So when we add all our operating expenses, we have 191, 200. So we less the 1912 from our total income. This is our total income. So we less 4400 minus 191,200, which will give us 186 in time. That is a net loss. That is a net loss. So for this particular question, that is how we go about it. That is all. If you have not subscribed to the channel Rad Academy, subscribe for more question and answers tutorials, and also share for your friends to also have a benefit of this channel. Subscribe for more videos. See you in my next video. Bye-bye.